Welcome, everyone, to episode 4 of the Change the World podcast. Today, I have a very special guest, a very close friend of mine who we actually met in college and have grown in the industry together, just bouncing ideas and now doing business together every single year, slowly growing. So without further ado, one of my go-to lenders, Spencer Sundlie. Thank you for being here.
Thank you, man. I appreciate it.
Yeah, man. So I wanted to start off today really talking about how we got started so young. I think one of the hardest things when I was starting is I never had someone to actually build the business with me. So I always felt like I was alone, right? I was like the only 18-year-old in the industry, the young kid with the Macy's suit showing up to all these things.
I had the Macy's suit too, man.
Yeah. But if you want to talk a little bit about how we ended up meeting and how things started evolving from there.
No, 100%. So to kind of jump into that, I kind of have to go back to like my family, right? I come from a family of real estate. You know, I had a mom that was in lending. I had a grandfather that was also into real estate. And so I came down here for San Diego State, ended up running into you. It was like fate, right? You know, running into you in my first class of college, and, you know, you started talking about real estate. And I was like, man, that's exactly what I'm trying to do. I need to talk to this guy. And so I reached out and I was just like, hey, man, like, can you just kind of break it down for me? What do I need to do to get into this industry? Because it was, you know, something I'm super passionate about and I wanted to get into it.
Yeah, and I remember it was the first class of our freshman year in college, and I had just sold my first house, and they were doing an icebreaker, the 2 truths and a lie, right?
Right.
And one of the truths that I threw in there, because I was a little cocky 18-year-old, was that I had sold a house, right? So then as soon as the class ended, you like chased me down, was like, hey, how do I get my license?
I quite literally chased you down.
Yeah. Like tapped me on the shoulder after class and was like, hey, like, how do I get my real estate license? Now, I had told a lot of friends in high school, like, how to do it. It's very easy. It's like, go on this website and take the classes and you're done. So I didn't know who Spencer was. So I was like, told him the same thing. Here's the website. And then 3 months later, he calls me. He's like, hey, I got my license. Now what? Right. And I was like, what the heck? This guy actually did it. And that was like the first thing that kind of like sparked that relationship. It was like, okay, this guy doesn't just talk about what he's going to do. Yeah. He actually puts his mind to it and does it. And you started working as a realtor. I got you an interview with my broker, and you started working there. And first year, you won Rookie of the Year. So walk me through that first year and the initial like first transaction. How did that go down?
100%. I mean, you don't realize how much work it is until you get into the business, right? I think a lot of people view this industry as something, oh man, we're going to get rich and get rich quick. But the reality is there's a lot of work behind it. I mean, I quite literally for a month straight did an open house every single day to get my first sale, or just to get my first client. At that point, then from there, I was able to take that first client and get them into a house after that. But that kind of just shows, hey, how much work goes into this industry to, you know, succeed. And at the end of the day, you know, I really loved the real estate sales side of things. But I think for me, I was always someone who was very logical. I was very into numbers. And so I kind of started to branch out, and I was like, hey, you know, COVID happened and I was trying to think of ways to fill my time. And at that point I was like, why don't I go and try and get my mortgage license too? And so having that, you know, success with the Rookie of the Year was great, but it wasn't exactly what I wanted to do. And so I took that kind of same work ethic and then went and got my mortgage license, you know, in a pretty quick time, and then started getting into that industry and fell in love with that aspect of it. And have been doing that ever since, and working with you side by side. And I think it's also, you know, really great for me because I get to work with you more too. You know, we're already really good friends, but the fact that I get to work with you on a day-to-day basis is pretty awesome too.
Yeah, so that was a really interesting thing that you noted in that story, is doing an open house every single day. So I have some agents that work on my team. Some of them are brand new and don't know where to start. Right. But I don't think they have the work ethic to do that, right? Like, there's people that join the team or people that join real estate that I've seen that are like, oh, I'm hosting open houses, and they do, you know, a Sunday every other weekend, right? So that first client that came in, did he come in on a weekend open house? Or
no, it was actually like a Tuesday or a Wednesday. You know, it wasn't anything on a weekend. It just, they happened to be self-employed. They came into my open house on that weekday, and we kind of hit it off. And, you know, they wanted to write an offer on that house that I was doing the open house for, but they ended up not getting their offer accepted. But they were like, well, you know, we really liked you and we want to, you know, keep using you. And I think that was a good lesson for me to learn, like, hey, you know, people love to work with people that they like. And so from that, I saw the success from the open house. And so that kind of became my thing when I was doing real estate. I love the open house. And I think it's very important for people to find something that you like doing. You know, for me, I dreaded door knocking. I mean, me and you door knock together, and it was probably the worst thing ever, right? But some people do really well with it. And I think it comes down to consistency. And you're more likely to do something consistently if you enjoy doing it. And so the open houses for me was something I actually really enjoyed doing. And so I was able to do it more consistently. And even though that sounds like a grind to some people, it wasn't that bad of a thing for me.
Yeah. So every day for 30 days, got your first deal. And then from there, like I said, you went on to win Rookie of the Year. Then after you won Rookie of the Year, you're like, deuces, I'm done with real estate from the agent standpoint, and then moved to lending. Now, when you started as a lender, I remember the first deal I passed your way to do the loan. I was a bit nervous of like, okay, this guy's like brand new.
Yeah.
Like I got that feeling that some clients might get
right.
when they use me as a realtor.
100%.
Is like, you know, what is actually going to happen. And I think what you've done that's better than most people that I've worked with in the service industry for realtors is you actually went and like learned every single like thing about like your value add was you were the most knowledgeable person and you could educate the client. And not only that, you had also been a realtor.
Right.
So a lot of times when newer agents on my team need a lender, I feel very comfortable in having you as their lender because I know you're going to help them get the transaction across the table. Right?
And I think that's a huge help. I mean, the amount of times, like you said, where I can help an agent because you know, at the end of the day, I was licensed to do it. I've had experience in doing it. To be able to pass on that knowledge to them makes my life easier too on the lending side. Because at the end of the day, we're all working together, whether it's escrow, lending, real estate side of things. So the more I can teach your agents, you know, the better it's going to be for me from an efficiency standpoint. And then kind of going back to what you said about, you know, being the most knowledgeable. I kind of pride myself on that. I really love deep diving into the guidelines for all loan types. I don't think people realize how many loan types are out there. You know, everyone always hears about conventional, FHA, and VA, but there's very intricate things that you can do with each of these loan types if you know your guidelines. And so in the beginning, you're right. I mean, I really dedicated myself to really understanding these guidelines so that, yeah, I'm newer in the business, but I know more than somebody who's been in this business for 5 years. And if I don't know something, I will find out or know how to get the answer for you.
Yeah, and we ran across this last year. We had a client on a non-QM loan. He was buying a personal residence, and you ended up getting super creative. And I remember we were using another lender before because they only spoke Spanish. Right. And I said, hey, like I remember halfway through our home search, I was like, look, the house you really want is, you know, $1.7 million. The current lender can only qualify you for 1.4. I have this other lender who's really good, but, you know, I'll have to translate, you know, through the whole thing. Are you comfortable with that? They said, yes, absolutely. Yeah. Like, let's get it done. And literally there was no other lender that I met that could do that loan. Yeah. So what are some of the things that you've seen or some of the programs that people are not aware about that may be able to be a creative solution or creative situation? What are the top like 3 that come top of mind?
Yeah, I mean, just from a recency bias, I'd say the VA loan is kind of coming top of mind right now just from recent deals in terms of things you can do with this loan type that not many people know. You know, you may run into a situation where your client's not qualifying simply because of their debt to income. Well, the great thing about a VA loan that people don't really realize is it allows you to pay the seller. You can get a seller credit that pays off the debt of the veteran, which puts them in a better position and helps their qualification. And so I quite literally ran into this scenario within the last week. And, you know, we were able to help this veteran get, you know, debt free almost, but at the same time, help him qualify for the house that he really wanted to get into and he should have been able to get into.
Interesting. So is that seller? So a lot of people use the seller credit to offset repairs, to pay down their interest rate.
Yep.
But you took that seller credit. How much was it?
It was like an $18,000 seller credit, and we were able to pay all of his closing costs covered, but at the same time, also pay off a couple debts.
Interesting. So when we're talking about, you know, paying off the debts, I'm assuming you're talking about like, you know, maybe a credit card with really high interest. Correct. Or something like that.
Like a personal loan, anything like it can be any debt. And the great thing about the VA loan is people don't realize that, yes, there are caps on concessions that you can get. So such as like a VA loan, a lot of people will tell you 4%. The reality is that's not true. The VA guideline simply states that you can have all of your closing costs covered as well as a 4% concession. So people don't realize that you can technically go above that 4% mark to pay for the closing costs and then use just 4% for buying down the rate, paying off debt, all these things that can help this veteran either qualify or put him in a better position to buy.
Interesting. So the VA loan, number one, and not only just, hey, 0% down, but also all the other avenues as far as like the concessions and being able to pay off debts and credits and everything else. So really understanding how to use the VA loan as a tool. What about, number two or number three?
I would say
types?
Alternative documentation type loans. Like I said earlier, a lot of people know conventional, FHA, VA, like as the top 3 loan types, right? Because most people are going to try to fall into those categories. But a lot of times we run into business owners or people who get a lot of deposits, but maybe we can't necessarily show it on a tax return. There's a lot of other loan types that can work for them, as well as the reality is for those loan types, sometimes the rate is just as good as a conventional loan, depending on how much money you're putting down. For some people who have a substantial down payment, and maybe they're self-employed and get a lot of monthly deposits, maybe we look at doing like a bank statement loan or a P&L loan. It opens up more options. And because they have such a substantial down payment, the interest rate is just as good as, say, a conventional loan, depending on their credit scores.
No, that's super interesting. So now you learned a ton about the loan types. Now you learned a ton about all the guidelines, and you're really the most knowledgeable guy in the room when it comes to that. What I've also liked is you not only focus on learning everything about loans, but everything about real estate in general, right? There's been situations where clients text us after, right? They've closed on the house like 3 months later, like, hey, I got this tax bill, or hey, how do I, connect my SCG&E utilities? Like simple things like that, that you step in to help. And it's beyond your pay grade, right? It's beyond your line of work, but you still go out of your way to help the clients. And that as a realtor partner is a big relief, because I've been in situations where I'm traveling or I don't have the answer, or I have to look into it, and you step in. And one thing that I think has really helped you is you not only got really good at the industry, but you did something that a lot of realtors don't do and a lot of lenders don't do, which is buy your own house and learn the whole process.
Yeah, it was interesting.
Talk
definitely.
to me. How old were you when you bought your first house?
22. Yeah.
22. Yeah. Most people are in their 30s and 40s, still trying to buy their first house. How did you go about buying your first house at 22, and what did that teach you?
It was a really big goal of mine to get into a home, and I even had to tell my now fiance, hey, I'll get you the ring, but it's got to come after we get the house.
Boom. Ladies, if you're listening.
Good financial advice. But basically, it was interesting to be on that side of things. And, it was a cool experience because, I have a real estate license. And so at the time I was able to represent myself on buying this house too. So I got paid to buy the house, which is pretty cool. And it's kind of a fun story to tell, but it was cool to see it from, what I deal with every day's perspective, the buyer's perspective, the borrower's perspective. I was able to see, all these disclosures, like, man, I know them like the back of my hand, but when you're the buyer on the other side, it can be daunting when you get sent a 100-page document that you need to just click here to e-sign. You're supposed to review it, but, not a lot of people do. And so it kind of gave me this added sense of, hey, like, I need to be able to show that I know all of these documents in and out, and I should know if they have a question about a random disclosure that I should be able to answer it. And so going through this process, I was able to learn and kind of read these documents and then, use it in future use when people have come to me and asked me about, a different disclosure that's in the package.
Very interesting. And through that process, are you able to sympathize with the buyer a lot more in some of those like fears of homeownership that maybe as a realtor, you're like, hey, like just buy it, just sign, but now as having the buyer background?
Yeah, 100%. You know as a realtor that it's an emotional process to buy a house.
Yeah.
But being on that side of it, you understand it a little bit more and go, yeah, this really isn't emotional. Like, I'm doing an inspection and there's this, and this wrong with it. And now I understand why the buyer's hesitant to proceed. And I need to kind of sympathize with that when we're talking with them and saying, hey, like, I understand, take your time and be more patient with the buyer, which I think in the end gives them a better experience.
Yeah, absolutely. Now, dealing with, a lot of clients, myself, especially previous to the investor side that I do now, working with first-time home buyers and doing everything else, there's obviously a lot of scenarios that we run into that it's really hard to dig people out of a hole that they've dug themselves into, whether it's credit, whether it's savings, whether it's bad financial decisions in the past, that even though they want to buy a house and there's that motivation and maybe they have a cosigner and we do everything in our power to help them qualify, what are some of the things that, you know, are big red flags that people should avoid if their goal is to buy a house in the future?
Yeah, there's a few things that come to mind, and you may have heard these, but you know, when you're in the process of buying a house, you know, really try to hold off on financing anything or, you know, getting into a new car or credit cards. You know, like I said, I'm sure you've probably heard this before, but I can't say it enough because it still happens. You know, things like that can kill your qualification, and, you know, you need to be able to basically know this until you're closing on the house, because up until you're closing on the house, people don't realize lenders have what's called undisclosed debt monitoring. They're constantly watching people's credit up until we close to make sure that there is no new debt. And if there is new debt, we're going to catch it because there's going to be an inquiry that comes up. And things like that can kill the deal and ruin, you know, a buyer getting into their dream house.
Interesting. So what are some things that, you know, that those are some things to avoid? What are some things to do to prepare to buy a house? I mean, you bought a house at 22. Not many people can say they've done that. One thing that you have that I don't is that you're very like responsible with your personal finances, right? I think it took me like 2 years of making good money and blowing it to understand, wait a minute, me and Spencer started the same year. Why did he buy a house 2 years before I did? Not on a jealousy standpoint, but what did I do wrong? And really it was like your smart investments, your Roth, your this, your that, right? Yeah. What are some things that you said, hey, I receive a commission check, and for young realtors who get a $20,000 check up front, which happened to me, right? It almost feels like, sweet, I can go buy the car I always wanted. I can go on that vacation. What are some things maybe from your past, the discipline, that helped you prepare to buy a house and do the smart financial decision?
No, I'm actually really glad you brought this up, because there's some things that I've started doing recently, just kind of from learning and being in this industry. You know, I think a big thing for a lot of people in this industry, whether you're a realtor, lender, whoever, right? If you're self-employed, people tend to forget about taxes. That's a big one.
Yeah.
And, you know, what I started doing is I opened a high yield savings account.
Okay.
And every commission check that I get, 30% automatically is going to get put into that high yield savings account.
Okay.
So that I can make my on-time quarterly payments, so I don't get hit with this huge tax bill at the end of the year. And I think doing that started putting me in a better position to where I'm not like, oh my God, I have this bill that I need to pay. You know, it's like, oh, I've already got that covered, and everything excess I can put away in savings and put into things like a Roth IRA, where I'm starting to, you know, plan for my future, which I think a lot of people don't do when they're young, because, you know, it's fun to spend the money and go do some cool stuff. And at the end of the day, you know, you should still do that and have some fun, but, you know, still think about the future and what you need to do to have a comfortable like retirement, right? And so I think that for me was huge, because it started putting me in a position where I could save a lot of money and, you know, save substantially for a down payment. And at the end of the day, you don't need to have a crazy down payment to buy a house. And so, like I said, that put me in a position to be able to do that.
Very interesting. So you have the Roth IRA, you know, you're setting aside money for taxes. You buy this house, and now I've heard you talk about, you know, now investing and doing that kind of thing. So what's kind of Spencer Sundlie's next move when it comes to his investment?
Yeah, you know, I think I definitely was lucky that I bought into an area that I think is going to continue to develop and be kind of prime for a really good rental, especially with, I live in Eastlake. You know, there's a new library being built out there, and there's talks of SDSU's nursing program and stuff potentially going out there, as well as like a cinema. So I think, you know, with that location, it'll be good for a rental. You know, what I see for my future is I would love to get into a dream house. You know, I want some land, you know, for my dog. But I'd also look into investing. You know, I really want to get into rental real estate, especially just being in the industry myself, having clients that have quite a few rentals and seeing what that can bring in terms of wealth. I would love to do that myself. And so I'm starting to kind of look into what my options are, whether it's investing in the state, out of state, just to get the cash flow rather than appreciation, stuff like that.
Nice. So there's that investment standpoint. Now, this is something that I'm super curious about, and I feel like I ask all the questions for our potential clients, but there may be other people listening or other young people that want to get into real estate and they don't know that there's other options out there. I didn't know that lending was an option.
Right.
I didn't know. I went for the, the easiest license I could get,
Yeah.
and just get my foot in the door. And maybe, if I would have explored a little more, like now I'm moving more into development and that kind of stuff. But I didn't know what there was out there. I just saw real estate and I thought real estate license was the only thing to do and realtor was the only thing to do. So if someone's considering different avenues in real estate, what would you give of advice to a young lender that wants to succeed in the business? Because there's a ton of I've seen the statistics, like every year there's more realtors. I feel like every year there's less lenders.
100%. Yeah. No, and it's a very hard industry to get into and put your foot in the door and really kind of have a cornerstone in the industry. But, what I can recommend to young lenders is, really get out there and make connections, do things like this, right? Do a podcast with your friend that's a realtor, and then, like I said, really dive into the knowledge of the guidelines. The more knowledge you can provide to realtors or future clients, the more likely they're to bring you, referrals. And once you can build on that referral base, eventually it's going to get to a point where, you don't necessarily need to grind as much to get the clients. You're just going to build off of that referral base. I think that's huge. And that's huge for, I think, any industry, right? Referrals is always going to be the best source. And so I think my biggest recommendation is, get out there, make those connections, do the networking events, especially with where we're at here in San Diego. There's so many opportunities to meet people. And like you said, there's so many people in real estate in general. I think San Diego County has, tens of thousands of realtors,
It's 20,000.
Yeah, it's exactly. And so it's like there's 20,000 people and odds are thousands of them don't have a go-to lender. Go be that go-to lender. And if you can't be the go-to lender, go be the secondary lender for when that first lender doesn't pick up. Because then they'll start calling you and maybe you become that first lender.
Very interesting. Now, has there been a story, or especially when you started out, obviously I gave you what was the first deal that we worked on?
Ooh, the first deal that we worked together, was it VA deal? La Mesa condo?
Was that the first one?
I think that was, yeah.
Okay. Well, that's actually more recent than I thought. That was like 2 years ago.
I think now it's almost 3 years. Time's flying, man.
Wow. So obviously I gave you the first deal and your service was incredible. Like he just mentioned, always picking up the phone, always knowing every answer, like always diving deep, always, even stepping in and doing part of my job at some point of like, answering questions for clients in group chats or emails, like not because I'm the realtor and, the realtor's supposed to answer that. You kind of stepped in when I wasn't available and took some of that load off of my back, which was awesome. So then I kept using you. When people don't know the quality of service that you have and they haven't had that referral and I gave you business just because you were my friend at first, but now I actually, trust you with my clients and my business more than because we're friends, because you do a really good job. How did you break in and become that go-to lender to other realtors that maybe didn't have as close of a friendship and just gave you a shot at the beginning?
It definitely goes back to making sure I do a good job on every transaction. I mean, at the end of the day, I care about the clients, right? I don't just care about the paycheck. I really care about these clients. These are people's lives that we're dealing with in terms of, in some scenarios, they may be homeless if we don't get this deal closed. So I really care about the clients. And so I always want to do a good job. But what ends up happening is you do a good job and, whoever may have been the listing agent on that transaction realized that and said, hey, you were super communicative. You did a really great job and, I have a client for you. And so from there, it kind of stems from there and you start getting clients from them and then same thing, they start sending you more and more because they start to trust you more. They see that the job that you do. And so that kind of goes back to in terms of becoming that, primary lender by first being their secondary lender.
Interesting. Yeah. And I think one of the things that I can take away from this is that the business will automatically grow if you just focus on doing like the best job that you can.
100%.
Because I feel like I've run into a lot of realtors and lenders that we've worked with that have so much volume that they're like, in their mind, it's the other way around. It's like, if I just get enough people to work with me and 20% don't like how I work, then it's fine. I still have the other 80. For you, it's like every deal is the most 100%. Important deal.
And I think that's just how I am as a person, right? Everything I'm going to do in life, I always want to give it my 110%. That's just the way it is. And I'm going to continue to do that. And it's paying off, right? Like I'm able to live a very good life.
Yeah, awesome. And now, obviously I asked Sanjay this on the last episode. What I've seen in recent, months and in the recent years, for a lot of time, you had that delayed gratification, right?
Right.
It wasn't like enjoy as much as I could spend. Like if I'm making 20 grand, I'm going to spend 21,000, right? You were doing a lot of the delayed gratification. I was the other way around at the beginning, I can admit. And now you're at a position where you're comfortable, you're doing well, you own your house, you're buying more investment property. And I've seen that you've actually started to like find more and more of a balance in life.
Yeah.
Talk about that transition and how you're able to like really enjoy the fruits of your labor over the past 4 or 5 years.
Well, basically, every time Miguel calls me, I'm on a golf course. But no, I definitely kind of resonate with what TJ said on your podcast too, in terms of the work-life balance. Your priorities kind of change. Maybe in the beginning it was all about, getting a paycheck. But at the end of the day, like, that's not all that's out there. And I enjoy, I love what I do, and I'm always going to answer my phone, even if I'm on the golf course. But I also want to enjoy life and do things that I love. And, golf has been one of those things that I've just started to get addicted to. And so I spend a lot of my time doing that or traveling. That's a very big thing for me. I love to travel, and I'm very thankful that, this job allows me to do that and still be able to work from there. I can work from the Dominican Republic. I can work from Mexico. And so I get to enjoy, and I'm very blessed to have that opportunity.
Yeah. And one thing that I haven't asked you, right? So both of us, like, we really enjoy travel. We really enjoy, I'm very spontaneous, right?
Yep.
So I'm like, okay, last week I was in Seattle. Right after this podcast, I go to the airport, I go to Vegas. In 2 months, we're going to Spain and this and that. And it's not anything I planned out. It's like an opportunity came up. I'm taking it. Boom,
Right.
I'm done. The difference between what I've seen you do is you're really good at setting goals, and you're like, hey,
Yep.
there's this coming up. I'm going to break it down. I'm
Yep.
going to so talk a little bit about goal setting and how you do it on a small scale and a bigger scale as well.
Yeah. Funny enough, this is going to stem back to my high school days. I was actually an Avid. And Avid had a very set way of setting goals, and I think part of it stuck with me. I don't follow it to a T. But, I think it's very important every year. Me and my fiance actually get together and we talk about our goals for the year.
Interesting.
Whether that's short-term, long-term,
How important is that to do that with your partner?
I think it's super important, kind of see where our goals are at and see if we're aligned in what we're trying to do. And that way you can also support them, right? I want to be able to support her to reach her goals, and in turn, I want her to be able to support me to reach my goals. And so we have that conversation. We talk about our short-term, our long-term goals, and both of us really love travel, and so we can kind of talk about, I really want to visit a new country this year, or she really wants to visit somewhere we've already been again. And so we can kind of talk about that and see, how can we set a goal together so that we're both happy with it, right? And so I think just in life in general too, having those goals allows you to have something to reach for. At the end of the day, you may not reach all of your goals, but if you can say, oh man, I met 2 or 4, you still did something, you can feel that achievement.
Interesting. So has there ever been a time where you set a goal and said, hey, 6 months from now, I want to go to XYZ country and I need to have, X amount in savings, and you weren't there? Did you still take the trip?
Oh yeah, I definitely did. I think that goes back to the work-life balance too. Like, I still want to have fun. If I was really
I was
close,
wondering how disciplined you actually were.
I would say I'm pretty disciplined, but I will make exceptions for myself, which may be bad. But even the Europe trip we went on, I wasn't necessarily
Unplanned, for
yeah,
sure.
it was last minute, but I'd set a goal for myself that I wanted to visit one new country.
Okay.
And that came along, and I'm like, it's a sign. Like, this is a goal
You
that
went
I
to
had
3
set.
new countries.
Exactly, yeah. And so it was a goal that I had set, and I'm like, okay, I can either check off the goal of visiting one new country or check off the finance goal. Let's do that one because it came up, and
Yeah.
it was, and you know what? I had a great time, and it was one of the best experiences of my life.
Awesome. Well, last but not least, one thing that I've been asking, and part of the reason the podcast is called the Change the World podcast, is that was kind of like a like hoorah phrase that my dad always had for me.
I've got one of the sweatshirts.
Yeah, there you go. So my backstory, but for the listeners, right? And it's all about like leaving a legacy, right? And how you're going to make a difference. Personally, I can vouch that everyone you're around can always say you're a positive person.
Yep.
Can always say like just hanging around you is an uplifting, experience. And you've been through a lot in your life.
Yep.
So aside from you just being you and being a good person, what is there any vision you have for like, okay, Spencer, 20 years from now, you're helping all these families, you're helping all these realtors. what is it that you want to like leave as the Sundlie legacy here in San Diego?
You know, I think you nailed it on the head in terms of the positivity thing. I think a huge thing for me is I really want people to see the positivity and you know, live life to their fullest, just because of things like I've experienced in my past. You know, I'm a pretty open book. You know, my dad passed away when I was 17, and I kind of had a choice at that point. That was right before I was supposed to leave for San Diego State, and I had a choice. I could be sad about it, which, don't get me wrong, it was sad, but at the same time, I could be positive about it and see it as, oh man, life can be short, and I should go out there and make the most of it and try to spread positivity. So I think my legacy, I really want, you know, the clients that I run into, the realtors that I work with, the service providers, I want them to all see that positivity, but at the same time, give them a great service so that they want to come back, bring their family, and, you know, maybe pass that down onto my kids in terms of if they want to fall into this industry too.
Yeah, and I think that's one of the most important things. Like if somebody asks me like about you and asks about Spencer, I'm not saying, oh, he's a phenomenal lender, right? I'm like, he's genuinely a really good person that pushes you to be the best you can be. Yeah. And it's really interesting, and you've been very like patient with me, right? Because for the first couple years, like I was kind of like, you know, making money, spending money, you know, doing flashy stuff that I've kind of grounded myself and humbled myself for the past year. But you never were like judgmental about it. You never were like, you were like, hey man, like whenever you have questions, whenever, you know, you need help. I've been asking you about, you know, buying my personal residence for like a year, right?
Yeah.
And you've never been like, dude, you've been saying you're going to do that and you never did.
I'll crack a joke here and there too, but no, I'm not here to be judgmental. You know, I'm not your parent. Like, and I kind of live that way in my life with people that I run into. I'm not your parent, but if you're going to reach out to me for advice, I'm going to help you because I'm definitely someone who loves to help people.
Yeah, absolutely. Absolutely. So other than that, man, thank you again for being on the podcast. All the great tips about the loan programs, all the great tips about young people starting out, all the great tips about really doing quality work. I think that's something that you really are proud of, that your work is always done the right way and you care about people and you're positive and you're leaving that legacy behind. So if you guys have any questions, if you're a realtor that's looking for their number one
or the secondary lender,
the only thing that he needs to work on is speaking Spanish so he can help that demographic.
Hey,
but even then,
I've got a 50-day streak on Duolingo. Okay, give me a few hundred more days. Okay.
Well, other than that, dude, thank you again for everything you've done for our clients, everything you've done for me, and for being on the podcast and sharing your knowledge.
Thank you for having me.
Of course.